Good morning, hello and welcome to Opening Bell. You're with us live on Moneycontrol. I'm Surabhi Upadhyay. It's a Wednesday morning. Half the country is celebrating Holi today. A lot of Maharashtra and Mumbai, of course, celebrated yesterday, which is when the market holiday was. However, unfortunately, even after this Holi break that the market has had, the color that we are coming back to on global screens is a deep shade of red. Markets across Asia are sliding. Some of the markets like the South Korean Kospi are down as much as 8%. At this point in time, risk assets are selling off. There is a flight towards safety. We're still seeing oil move higher. We're still seeing gold move higher. And all of this is happening despite the assurance that the US president gave global markets yesterday. Before we get to anything else, I actually want to start with that because he has promised safety and security to the Strait of Hormuz. Let's pull up that social media post that Donald Trump came out with. He went on to say that he will look at securing the passage of all vessels through the strait. And he says, effective immediately, I have ordered the United States Development Finance Corporation, the DFC, to provide at a very reasonable price political risk insurance and guarantees for the financial security of all maritime trade, especially energy traveling through the Gulf. Let's flip to the other side. He in fact says this is the first of many such measures that's coming. And he also went on to say that apart from this guarantee and the insurance cover, if needed, the US military itself, the US Navy itself is going to be flanking vessels and basically providing vessels a safe passage through the Strait of Hormuz. The question is, are world markets buying it? And if you look at prices on the screen and the reaction on the screen, the answer seems to be, well, a little mixed, more no than red there. He goes on to say that there are more actions to come. Thank you for your attention to this matter. Now, the issue is that this promise and this statement has not assuaged all concerns. Like I said, Asian markets are selling off big time right now, and oil prices, when the statement was made, by the way, last evening or yesterday in US market trading time, the market recovered quite well. However, now there is a sell-off that has started all over again. So there's plenty to cover. We had a one-day break. Can the Nifty escape what continues to be a global meltdown, a global sell-off? Lots to talk about. Let's get you the headlines. Tensions between Iran, US and Israel continue to escalate on day 4. Israel continues to strike Iran and Beirut. Iran continues to launch counterstrikes on Gulf regions, hitting US consulate in Dubai and paralyzing oil flows and airports around the world. Meanwhile, the Israeli Prime Minister Benjamin Netanyahu says that the war against Iran is going to take some time. In the wake of tensions between US and Iran, President Donald Trump vows insurance for ships in the Gulf after Iran shuts down the Strait of Hormuz, sending oil prices soaring. Adds that US military will accompany ships through the strait. Additionally, Trump lashes out at Spain for not backing US and says it will cut trade ties with the country. Remember, Spain had said that US should not use its soil for any military operations in the Gulf region. Now, stocks on Wall Street continue to sell off as investors monitor the situation in West Asia. The Dow closes off the day's low, down by 400 points after falling as much as 1,200 points during the intraday session. Meanwhile, the S&P 500 and the Nasdaq each end about 1% lower. Markets in Asia Pacific follow suit. Stocks trade in red as investors continue to monitor the situation in West Asia. The GIFT Nifty is indicating a big gap down start for Indian equities. Brent holds around $81 per barrel, halting a 3-day rally as traders assess a U.S. proposal to provide naval escorts for tankers transiting the Strait of Hormuz. Meanwhile, gold holds around $5,100 an ounce as stronger dollar weighs and rate cut bets are tempered. Okay, so let's quickly go over what we're seeing right now. And as I talk about some of the cues, we should actually fire up once again the US dollar, crude oil prices. Before actually I get started with some of the details, let's get some of those rates on the screen because oil prices have soared again. The dollar is rising higher. And in the overnight session, there was a bit of a let up on gold and silver. But again, a lot of that is changing because Asia is feeling very nervous this morning. what we had was a cut of almost 1,200 points on the Dow. And then there was a recovery when that statement was made about the US securing ships that are transiting through the Strait of Hormuz. And that's the dollar index. Look at Brent oil prices, 82. Now, in the overnight action, Brent was rallying about 9%. And then it reduced that rally to about a 5% gain because, President Trump assured that ships can pass through the Strait of Hormuz. But again, this morning, you can see the prices building on the gains yesterday. And now for India, this is a real issue. Brent oil at $82 a barrel. Quickly to recap the rest of the market action, like we told you in the headlines, the US market ultimately ended down by about 1%. NASDAQ, S&P 500, the Dow, all of them were down about 1%. Crude is the big watch point. And like we told you, now President Trump's promise, how much will it play out? Why is it not helping the markets mood, at least at this point in time? These are some of the questions we'll take to our guests in just a bit, because he's promised this safe passage, but the markets aren't entirely buying it. By the way, inflation worries are really coming up in the US as well, because if oil continues to escalate at this rate, what does it mean for inflation? And that is why bond prices in the US were down, because the bond markets are now worried that the Federal Reserve may not cut interest rates. And in fact, the US 10-year yield yesterday shot up to 4.1%. Then finally, it cooled off a little bit. It settled at about 4.06%. But there's a lot of nervousness in the market. The dollar index is almost at 99. We have to watch for the rupee. On Monday, the rupee fell over 0.5% versus the dollar. The rupee closed down at about 91.47. And with the kind of risk-off mood that is existing, and this big surge on the dollar, expect more weakness on the Indian currency today as well. Gold and silver saw profit taking in the overnight trade, but again in Asian trade this morning, gold and silver are back moving higher on the screen. And like we told you, Asian markets, look at the Kospi. Kospi is down 8%. That's not all. The Nikkei is down almost 4%. The Hong Kong market is down about 2% as well. So lots to track as we go forward. By the way, there's this China parliamentary meeting, their annual meeting where they set out their economic targets. So that's going to be an interesting watch point as well. Where does it leave us? Now, the Nifty, anyway, we're trading below all key moving averages. The index was testing levels of around 24,600 on Monday, and then we had a bit of a recovery. But looking at the global cues this morning, I don't think the bulls have any respite. There was a lot of selling as well from foreign institutions. Numbers are on your screen. They sold off cash stocks worth almost 3,300 crores. Domestic institutions, as usual, continue to provide some support, but there's just too much negativity, global negativity that we are dealing with. The VIX, the volatility index, has been climbing. It's at a 9-month high. The VIX is up in the US, in India, and all markets really around the world. We have some macro numbers that are not providing too much comfort. I just want to leave that on the table before we move on. Current account deficit is up. IIP in January has come in far weaker than estimates. January IIP at 4.8% versus 7.8% in December. So IIP has completely faltered month on month. Manufacturing, capital goods, a lot of these, internals are looking quite weak. Now, it's a 1-month-old data, so maybe it gets better. But anyway, for now, it's another negative macro cue. And on the current account deficit, the number for October, November, December is now above $13 billion. We were at about $11 billion same period last year. And in terms of, percentage of GDP, CAD is now at 1.3% of GDP versus 1.1% of GDP. And this is happening at a time when there's such a big global event happening. The rupee is weakening. So those are added slight macro worries with us. Okay, now what do you do with this market? Do you trade? Do you sit out? What do you do? Do you still think shorts? What's the agenda? Jatin Geria is with us from Teji Mandi and Gaurang Shah joining in. Gentlemen, good morning to both of you. Great to have you with us. I hope you managed to have a little bit of fun on Holi. But there was no green. There was only red across, I think, everybody's minds as well. So, morning, Gaurang, let me open with you. What do you make of things? I was really hoping we get back to better global cues this Wednesday, but that's not the case.
Thank you so much, Ruby, for having me on the show. Good morning to you and to all the viewers of Moneycontrol and CNBC TV 18. A small disclosure, we may go into stock-specific recommendations as well. That all recommendations that I'll be sharing this morning on your show are part of our fundamental research team recommendation. From a long-term point of view, our company Geojit or myself, we do not have any kind of investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So I have tried to put a little bit of green behind me since there was no green on the street, Surabhi, or in the Holi itself. So my sense, Surabhi, is that given the events which are unfolding, I think we cannot expect any kind of sensible upside in the market, because these are evolving stories, and I think these evolving stories are going to stay here for some couple of weeks. I don't think it's going to get over in days. I'm talking about the geopolitical situation in the Middle East, which has been the center talk all around the world. And I would rather very painfully beg to differ what President Trump has said, securing the guarantee of vessels. Surabhi, yesterday he made a statement that he can't guarantee safe passage for US citizens in that region. How on hell on earth he's going to guarantee safe passage of huge vessels? I mean, and he keeps on shifting this goalpost, over the last many years. I mean, last 1 year, I would say, because since the time he announced that tariff last year on first, or I beg your pardon, on 2nd of April, he has been shifting the goalpost even on the tariff front. Narrative that he gave for Venezuela attack that he did, narrative that he's been spreading now with this unfortunate situation in the Middle East, thanks to Israel and US, and the wisdom which failed to play upon both the leaders of these two countries. These are my personal views, Surabhi. I definitely feel that it was an unwarranted, and now you are coming and telling the world that forget about the security of US citizens, but I'll guarantee security and safe passage of huge vessels which carry to and fro crude oil and natural gas. I mean, who is he trying to fool, honestly speaking? And if that was the case, crude oil, and if the world would have believed what President Trump has said, crude have been below $65 a barrel, not at $80 a barrel.
I completely agree with you. The market has its own mind, and right now it's not buying into that promise at all. And that's so visible across Asian markets. By the way, I'm just checking Asia just to see if there's any respite, and there isn't. I mean, the Nikkei is down 4%. These are large markets. The Nikkei is down 4%. The Hong Kong Hang Seng, if we can fire up the Hang Seng rate, is down about 2.5%, and the Kospi is anyway down about 8%. So, what a rough Wednesday we are in for. Jatin, morning. The GIFT Nifty is telling us that we will open gap down maybe 500, 600 points. Now, I don't know, some will argue this market is oversold, abhi kab tak chalega, but I don't know, markets can remain oversold till there is a trigger otherwise. What's your thought process this Wednesday morning?
So first of all, morning. And what we believe is that this gap down opening will exactly open at the 20-month exponential moving average, which is placed around that 24,400 mark. So I believe that we are opening exactly at the support. Now, the significance of this 20-month moving average is that post the COVID fall, all the intermediate corrections have halted at this 20-month exponential moving average. Now, what we need to see here is that whether we get a meaningful pullback or we just break and go to the next support level, which is placed at around 24,100. So we have a few reference points in place where we can expect a reversal to come in. So 24,400 is the 20-month moving average that we are closely watching out for, and below that 24,100, which is the 50% retracement level of the entire rise that we have seen from the level of 21,743 towards the high of 26,373. So we have a couple of reference points that we can look out for. However, the trend as of now is still negative. So any intraday pullbacks should be sold into. However, I'll be not going short immediately at the opening.
So once again, Jatin, you're not shorting at the opening because the opening is going to be this gap down, 400-500 points, we don't know. But you're definitely not buying at any point in time today, right? You're not looking at a buy on dips at all.
Not currently, but we'll look out for opportunities in sectors where it might be beneficial. So, for example, the upstream oil and gas companies or for the defense. So that are the sectors that might be benefiting. So we might look into opportunities that are presented over there, but not in the broader market.
Okay, all right, got it. And at what level of a bounce does the Nifty become ripe for a short again, Jatin?
See, intraday, I believe that it is difficult for me to give that level because I don't know the exact amount of bounce that will happen. But purely speaking, the day before yesterday's low that is around that 24,600 mark. So that is where we got the bounce of uh, in the previous trading session. So any pullback to that level again becomes the level around which we can expect the pullback and thereafter sell off again. So
Okay.
24,600 is the level.
All right, got that. Gaurang, 24,600. Okay. Okay, got it. Gaurang, now what should the approach be? I mean, there are people who do trade. I mean, if not intraday, positional traders are there, and I think they've just been wondering what to do in this market. And then I'm talking about the investors, and the investors are wondering, "Aaj kharide ki aur ruk jaye? Is it going to fall more?" Because the problem is that this has become a bit of a falling knife. By the way, the Kospi is down 10%. I thought I'm not reading the rate correctly, but I cross-checked. The Kospi is now down 10%. It's that kind of a morning, Gaurang.
To be honestly speaking, if you're going to wait out and you're going to time the market, I think you're going to lose out on the opportunity. And I strongly believe that traders, irrespective of what levels are being spoken about, I think in a situation like this, where every hour there is a news developing on the negative side, we are going to have the markets react. That's why in my opening statements I made that this situation is not going to get over anytime soon. It may take weeks, not days. My understanding, Surabhi, is that these are perfect times when markets are giving you opportunity to create a portfolio from a long-term point of view. Now, instead of trying to time the market and master the market, because market has its own wisdom, and I don't think I have ever challenged that wisdom, and nobody should challenge market's wisdom. Use a strategy, draw down a roadmap in terms of how you want to invest into the market. Don't put all your money at one time is the first mantra. Second, whatever level of risk appetite you have, take that into consideration, bring out your shopping list and start allocating at least 10, 15, 20, 25%, maybe a little bit more in case if you got a little bit of elevated risk appetite. This is a situation which nobody can anticipate. With all due respect to all the experts, whether they are economical experts or whether they are fundamental experts or whether they are technical experts, all levels can be broken on the downside and all levels can be broken on the upside in case if there is a positive news flow, which I don't feel is going to come anytime sooner. But let me say this is a situation which we have seen in the past multiple times. And in all those, if you just flip back the pages of history, Surabhi, all those times markets have given you a positive return over a longer period of time. So instead of trying to be a Robin Hood of the market, why not be a sensible, informed investor and pick and choose your investment themes and ideas?
Okay, so speaking about some themes, before we talk about today's stocks and news, gentlemen, I want to get your sense on oil and gas stocks, upstream and downstream, because they are the ones most susceptible to this. Jatin, any trades, oil and gas, either or trades on the way up or on the way down?
Yeah, so ONGC and Oil India are good trade setups which benefit from this rise in the crude prices. So Oil India becomes a buy for me for a target of 525 and should place a stop loss at 468.
Okay, so that's one trade. By the way, big hello to all the viewers who are joining us on YouTube. There is Harshraj Singh. Harshraj, good morning. I think your question is exactly what I was discussing with Gaurang right now. Harshraj was asking about what is to be done in a market like this. That's what we're talking about. That if you're a long-term investor, then perhaps these are good times to get in. He's also asking, should we book profits or just wait and watch? And there's Hanuman joining in. Hanuman, the changer. Okay, good morning, Hanuman the changer. Welcome to all our viewers on YouTube. Gaurang, oil and gas, whether you would look at making any long-term investments here at all. And then to Harshraj's question, people who are sitting on some profits here and there, they're wondering that if this is not ending, let me just take my money out wherever it is. That's a very natural human tendency. What would you say to him?
I would say instead of taking money out, try to put more money, Surabhi. I just made a statement, right? that these are fantastic times to build a portfolio. Honestly, as a blanket disclosure, Shurubhi, I have not stopped my SIPs. There are almost about 4 or 5 SIPs that get debited in from my savings bank account. And luckily, I'm saying this is lucky because this is the beginning of the month. I've got my salary in my bank account and markets are down. I don't think there could be any better opportunity. So not stopping my SIPs. In fact, I would be putting some lump sum amount as well in some of these schemes that I've regularly put.
In what? Gaurang, in what? Give us some ideas.
So no, I can't give mutual fund ideas, Surabhi, because I'm not qualified to do that. But I'll give you just
stocks.
A focus. Yeah. So, defense, banking, I mean, somebody was talking about L&T and, like since the time this situation has evolved, this geopolitical, I think everybody has started to write an obituary for L&T. Let me say this very, very clearly. Yes, there is a dedicated order book which is concentrated in the West Asia, that is Middle East. Remember one thing, Surabhi, whatever gets destroyed needs to be rebuilt. So L&T, being the kind of giant that it is and the kind of presence that it has got, not only in India, in the Middle East, West Asia, but rest of the world, and the expertise in the hydrocarbon and turnkey projects, complex engineering, these destructions need to be rebuilt. So you will have these orders coming back. So as a blanket disclosure, we have a positive coverage on L&T, and I don't think anybody should think of selling. I mean, if you wanted to sell, why didn't you do it at 25,500 or 26,000? Why on earth you want to sell it at 24,500 or wherever the markets will open up today at 24,300 or 200? You have time by your side. You have a little bit of elevated risk appetite. Stay invested if they are good, strong companies. Don't exit the market in this kind of a situation because in the next couple of weeks, you're going to kick yourself.
Okay, all right. I think Gaurang is saying it as loudly as he possibly can. This is the time to get in and invest, not a time to run away. Vivek is asking for a view on pharma stocks. Hi, Vivek. Komal wants a view on defense stocks like BEL. I'm just noting all these, and we will come back to all these questions. Bharti Airtel, Shiv Kumar has a question on Bharti Airtel. And there are some of our viewers who want a view on crude oil, gold and silver. So coming back with all of this, folks, keep it with us. But I also want to talk about the stocks in news because beyond all of these issues and these global headlines, and obviously we'll watch for defense and oil and gas, there are some other stocks in news as well, which we must keep on our radar this Wednesday morning. So quickly running through them. JSW Infra. Now, one of the company's 15 storage tanks at Fujairah has been damaged. You remember those visuals that we've seen yesterday of smoke billowing out of the Fujairah port? Well, one of the JSW Infra's tanks has been damaged. It's one of the 15 tanks that they have. The company is saying it does have adequate insurance cover. They are looking at limiting the damage and seeing how quickly things can be restored over there. But watch for JSW Infra. Adani Ports came out with its business update for February. Total cargo handle, total volumes were up about 16%. So keep that stock on your radar as well. For Greenply and Greenlam, there are some, not so great developments. The IT department conducted search and seizure operations at the offices and the manufacturing units of Greenply. In fact, they also conducted these operations at the promoter's residence. This was on the 26th of February, and the stock exchange disclosure has come through. So keep an eye. Greenlam as well. IT department conducting those operations at the manufacturing units of the company, 2 of the units. Okay, let's talk about Lupin. Lupin, the GST department has conducted an inspection and a search proceedings at the company's office. So that also, because of that regulatory action, we'll just keep the stock on our radar. Dabur is looking to acquire a minority stake in luxury skincare brand Russ Beauty for 60 crores. And some people call it Ras, some people call it Russ. I'm not sure, but I'm sure whoever is on Instagram has come across this brand very, very frequently. So this continues to be in step with how we're seeing large listed FMCG companies go and acquire these digital brands, digital FMCG or personal care brands. We've seen that with the HUL and Minimalist, and now this is Dabur doing the same. So interesting acquisition. We'll watch for it. Hindustan Aeronautics has won an order. The Defence Ministry has signed a contract worth 2,900 crores. This is for the acquisition of 6 advanced light helicopters. And finally, Tata Motors is going to be on the radar. The company's clarified on reports of Indonesia putting its commercial vehicle imports on hold. Tata Motors is saying that there is no demand or execution risk. The order received from Indonesia will be fulfilled, and they're intending to start supplies soon, and they'll be completing their deliveries in a phased manner. So that's Tata Motors for you. Let's do one thing. Let's take a very quick break. The pre-open rates are just about coming through, but I want them to settle for the next 2 minutes before we look at them. The first rates are very, very misleading. Quick break. Check out the global market action in the meantime. We'll be back with our pre-open session and more updates and stock analysis with our experts. All right, so now let's get to the pre-open. You just saw all the global rates and how global markets are behaving, and there's such, fear out there in the markets. It's not going away the way Asian equities are moving. Now, for us, we do have about a 700-point drop on the Nifty in the pre-open session. This is exactly what the GIFT Nifty was indicating, that it will probably start 500, 600 points down. That's what the pre-open is doing for the time being. Let's pull up the rates. And let's talk about the Nifty losers. This should settle. I mean, Reliance down 5% seems a bit of a stretch, but you never know with these markets right now. HDFC Bank is down 5%, Reliance is down 5%. Let's get all the Nifty losers up for you. Yeah, there you go. Shriram Finance 6% lower. L&T, which had such a severe cut on Monday. And L&T, there's a real, at least tangible threat that people are latching onto. The fact that a lot of their business comes from the Middle East. That stock's down another 3.5%, 4% as you can see. Bajaj Finance, Mahindra & Mahindra, Hindalco, L&T. On Monday, at least the metal stocks were doing pretty okay. There was some green on metal names, but at least this morning in the pre-open, we're not seeing that. Hindalco is down 2%. JSW Steel is also weak on my screen. Eternal, Maruti Suzuki, Tata Motors, everything seems to be down. The only stocks that are actually on the upside, now I'm talking about the Nifty winners. There's ONGC, which is up 2.5% right now. There's BEL, which is up 1.2%. And there's maybe a Cipla, and that's about it. The rest of it, some IT buying seems to be visible in the pre-open. Let's see if this actually plays out in the real market open as well. But the pre-open is suggesting that, there could be a slight move towards IT. Remember, these are companies which have been beaten down, stocks that have been beaten down so much, and companies are cash rich. So, in the pre-AI disruption era, IT was always seen as a bit of a safe haven in times of absolute risk-off. But then, IT is now, its own path is so confusing that you don't know. But that's those are some of the rates on IT stocks as well at this point in time. That's how it's playing out. I want to go back to our guests and quickly take a question on defense names, because we have lots of viewers talking about defense. Aditi Nambiar is asking whether it's a good time to invest in HAL. Someone did ask about BEL as well. Komal Makija was saying, what are the views on defense stocks like BEL? So let's talk about this, gentlemen. Jatin, BEL, HAL on the charts, or anything else in defense, any other defense stocks that you look at a long trade in?
Yeah, so defense, there are selective stocks that we like in the defense, Bharat Forge, MTAR Tech and BEL. As the viewer has requested for BEL, I'll give out the levels for BEL. Yes, BEL is the outperforming stock. It has retested its previous breakout, and now it's on the verge of a next leg of the up move. So I would be expecting 500 on the upside. One should keep a stop loss at 430 for this long trade. So BEL definitely is a buy.
Okay, so BEL is buy. Jatin, also viewers have been asking about views on gold and silver. And I'm looking at gold, silver and oil actually. Lots of viewers are asking about oil. And I'm seeing Brent prices now. It's just marching higher. 81, 82 has been crossed. Now we're at 82.25. So no one's buying Mr. Trump's assurance that he will make sure ships are safe in the Suez, like Gaurang was saying. No one's buying that. I don't know, technically, have you looked at the charts? Gold, silver,
Yeah,
crude.
so
What do you see ahead?
I'll give out the levels for the Brent crude. So now Brent crude has crossed above its previous swing high, which was around that $77 dollar mark. So now the next crucial resistance is placed at $87 and thereafter $91. So these are the levels around which we can expect the up move to continue. On the downside, the crucial support will be placed at around 76.7. So $76 is a crucial support where we had this huge gap up and thereafter it moved out and it moved out even further. So $76 is the support level, and on the upside 87 and $91 are the expected levels on the upside.
Wow, 87 and 91, huh? Because we have viewers asking, Dhruv is asking, should I invest more in crude for profits? So I guess if you're nimble, if you're a short-term trader, then crude is a long trade, right, Jatin?
Yeah, crude is a long trade with a $86 stop loss.
86 is the, okay,
Oh,
all
sorry,
right, got
76.
that. 76.
70.
76
Yeah,
is the stop
70.
loss, yeah. Your
Correct,
targets
correct,
are
correct.
89 and 90 plus. Yeah, I
Yeah,
got it.
87 and 91 are the
Okay,
targets, and
other targets. Got that. Gaurang, very quickly, we have a couple of viewers asking about pharma stocks. And I think this stems from the fact that people are trying to now look at ideas where there is no global disruption, where the war doesn't matter. And maybe that explains a little bit of green on IT as well today. What are your thoughts? IT, pharma, is there any point making a fresh investment now?
I guess I definitely feel it is, Surabhi, like I mentioned earlier. IT and pharma, as a disclosure, we've been positive on both these names for a pretty long time. IT, if I have to identify some names in the mid cap, small cap, then Coforge, LTI, Mindtree, L&T Technologies, TCS, HCL Tech. Pharma, we're positive on Cipla, Sun Pharma, Glenmark, Glen Pharma, Natco Pharma, Aurobindo Pharma. And I would also say that have a look at healthcare and diagnostic sector as well when you look at pharma, because all three make a universe called pharma and they're counter dependent on each other. So your names like Apollo Hospital, Fortis Healthcare, Max Healthcare. In diagnostic side, you have companies like Dr. Lal Path Labs.
Okay. I also want to talk about some of the stocks in news, and JSW Infra is down about 2.5% because of the news that we just shared that one of their oil tank facilities in Fujairah port, that was hit by drone debris. Any thoughts on this stock, this company, if you've had a look at it, Gaurang?
So I believe this IPO was quite some time back. We had covered it during the IPO time. The name is a little bit confusing. GSW Infra, people normally identify as an infrastructure stock, but this is a port logistic company. A large part of their operations is in the West Asia, Middle East, where the geopolitical situation is developing. We don't have a specific coverage, so I won't be able to give you a buy, sell, and hold. But minus Middle East, West Asia, they have got a decent amount of investments in Indian ports as well. And there are a lot of new ports that are coming up for logistic business, which the government has drawn a blueprint about. So they have invested in quite a lot in India as well. And I can't give a buy, sell, and hold because we don't have a coverage.
Okay. Gentlemen, we just have 5 minutes to go before today's trading action begins. So I want to get your compounding idea at this point in time, Gaurang, because you've been going out saying these are great, opportunities to go in and make those long-term investments. So give us one, two, three, whatever. You choose your stock.
I have a long list.
Wish list. Yeah.
I have a long list. The wish list is very, very long, but I won't try to give too many ideas. So I think one stock that you were just discussing, BL, Bharat Electronics Limited, I think it's been a stellar performer on Moneycontrol itself and on your channels, other channels, CNBC TV 18, CNBC Awaaz and CNBC Bazaar. We've been recommending this stock a number of times from 380 levels and much below that. So BL is one from the defense side. From the banking pack, I think last time we spoke about Indian Bank, if I'm not mistaken. I think banking should be on the radar. So State Bank of India, which has been a stellar performer, hit a new lifetime high and has been holding itself quite well. So this second one is from the banking pack, PSU. And the third one from a sector which nobody wants to take a call right now, but I would dare and stick my neck out, and that is Cap Goods Engineering, and I spoke about it, L&T. Great time to nibble into it.
Okay, all right, got it. Interesting ideas over there. Gaurang, let me come to Jatin as well. Jatin, we've discussed a whole bunch of stocks, but now I'm asking you top trades. And there are viewers asking specifically, again, Nifty levels. If the Nifty does dip below even, say, 24,300, what should be the Nifty view? And again, your top trading ideas for today.
Yeah, so first I'll give out the levels for Nifty. As I pointed out that 24,400 is the 20-month average. So even the pre-market open has settled around that level. So that becomes a crucial level to watch out for. If the Nifty intraday gives a bounce back, then around 24,550, 24,600, I'll again go short. If the Nifty doesn't bounce and slips towards that 24,100 mark, then at that level I'll be looking out for buying opportunities. But as of now, these are the levels for Nifty. Now, as far as the trades for the day are concerned, we already have a short on Oberoi Realty. That's a disclosure. So we would continue to holding onto their shorts. For fresh trades, we'll be looking out for shorting opportunities only on a bounce back. So no trades for me as of now.
Jatin, I just want to quickly bounce off gas companies with you as well. IGL and MGL, Gujarat Gas, because there's just so much of nervousness with what happens. We're not going to get that Qatari gas. I mean, from the looks of it, if Mr. Trump can secure the Strait of Hormuz, then great. But otherwise, there's just so much nervousness. European gas prices have been surging. What is the outlook on the stocks? Just technically, how are they placed? MGL, IGL?
Yeah, so within that gas distribution companies, we believe that only MGL has a good technical structure because from the lower levels it has been forming a high top, high bottom structure. So MGL is the only stock within this gas distribution space which has a good technical structure. If one wants to enter, then 1,100 is the support level, and on the upside we can expect around 1,300. So it's a trade that if someone wants to take a trade in the gas distribution space. Otherwise, I would not really venture into this space because only one stock among the entire space is looking positive. So I would avoid that space at this point of time.
Okay, all right. Jatin, thank you very much for all your trading advice today. You have a great session. And let's see how it goes. Hopefully, it's the end by 3:30. It's better off than the open. You have a good one. Thanks so much, Gaurang. Just one or two few more questions for you before we let you go. Now, financials. Interestingly, in the pre-open session, the Nifty is down 2%. The bank Nifty is down to 2.5%. So I just want to let the market open happen and then ask you about whether financials. I mean, what do we do here? Because that's a pretty interesting trade. Some of the large banks are showing a lot of pressure today. And perhaps this is because macro worries are now beginning to hit. So let's just go over this and see how it plays out. 400 points down at the open. That's what the opening is at this juncture. You can see the Sensex down about 2%. The Nifty is down about 1.8%. Nifty Bank down about 1.5% as well. So the Nifty Bank is settled. In the pre-open, the Nifty Bank was down even more than the Nifty. But now I think they're more or less in step. Midcap index is down about 1.5% at this point in time. Let's straight away get to the stocks. Look at L&T. Look at the slide on L&T. I mean, it's relentless. A 5% drop on Monday. Another 5% this morning. This is just completely astonishing. 6% down on L&T. Let's move to stocks. Nifty losers. Let's quickly get them up. Interglobe Aviation. The same two stocks that were the weakest Nifty performers on Monday are again down. They're the weakest performers this Wednesday morning also. L&T, because of its West Asia exposure, Interglobe Aviation, skies are still shut across the Middle East. And that's the concern playing out. And then, like I'm saying, a lot of financials are actually weak today. So Shriram Finance is 3.5% down. There's HDFC Bank that's weak. SBI Life is weak. Geo Financials is down 2.5%. So both banks and non-banks. Bajaj Finance is down 3%. It's on your screen as you can see. HDFC Bank, yeah, still 3% lower. So let's see how this plays out. What else? Mahindra and Mahindra, Ultratech Cement, Tata Steel, Reliance itself. Reliance is not providing any comfort to the market. For Reliance also, I mean, at least for their basic oil and gas refining operations, there are question marks about whether they'll get the raw material on time or not, because the refinery does rely on oil coming through that Strait of Hormuz, and those are the concerns that are playing out. So those are the gainers. Like I'm saying, there's some risk aversion fueling a move towards IT. So Infosys, Coal India, these are stocks up. ONGC, BEL is also slightly higher. TCS is up about 0.5%. HCL Tech. So basically, there is a bit of a flight to safety towards IT. These are cash-rich companies, they're well-governed companies. The stocks have been hammered. So it seems that's one trade that's underway. Now let me take a look at what's happening in the mid-cap market. Starting first with some of the stocks in news. JSW Infra is down 2% because of what happened with Fujairah Port and one of their oil storage facilities there that got hit. 2% down there. The gas stocks that we were just discussing, IGL, MGL, they're all weak. Down between 1 to 3.5%. Petronet LNG, look at Petronet LNG, 6% down again. I mean, where's the gas coming from? If you're not getting the Qatari gas, then the feedstock is completely disrupted for Petronet LNG, and that's really playing out on the stock. And today is one of those days that even metal stocks are not able to withstand just the extent of the nervousness, and you saw SAIL down about 4% over there. A lot of financials are weak as well, as we can see on the screen. Let me see what else is taking it on the chin. You have names like Samvardhana, Motherson down 4.5%, 5%. SAIL and Petronet we've seen. So these are stocks really on the way down. Is there anything on the gainers list apart from IT? IT, ONGC, Solar Industries. So mid-cap gainers will show up some defense stocks once again. Solar had a good day on Monday as well. And Solar is up this morning as well. Mid-cap gainers. Now let's see mid-cap gainers. Chola Finance is seeing some buying. Natco Pharma is seeing some buying. There's Zen Technologies. Idea Forge, Paras Defense. So again, the buying is limited in the IT space and in the defense space largely, and in upstream oil and gas, names like ONGC and Oil India. So those are the big trends. Nifty is now fighting around 24,400. It's a 500-point drop at the open, at least at this juncture. Gaurang, what thoughts on the opening? And you mentioned BEL. You like BEL in the defense space. Anything else? Private sector defense names? Anything else? HAL maybe, if at all?
Yeah, so we are positive on other. So I'll give you a list for the benefit of all the viewers of Moneycontrol and all those who are watching us on YouTube as well. Surabhi, BEL, the companies, primarily the companies that feature on the defense side, on the fundamental, BEL. There's a company called MTAR Technology, Surabhi. This one has been a stellar performer over the last 6 months, 1 year. Fantastic moves, and the Q3 numbers were much better than what the street estimated, including what our estimates were. Third one is Cochin Shipyard. Fourth one is Mazgaon Docks. Bharat Forge from the private player. L&T is also a part of defense. Unfortunately, it is down and out 10%. Correct me if I'm wrong. Over the last 2 days, 2 trading sessions. Then you have, this is just the reference, Surabhi, not a recommendations, that HAL, Bharat Dynamics, BEML, Garden Reach Shipbuilders. You have names like Paras Defense, All these are great players in terms of defense budgetary outlay, and of course export markets that will come through as an opportunity to export. So these are the names that we've been, these are the strong names, but the names I mentioned earlier are under our fundamental coverage.
Got that. Okay. All right. Thank you, Gaurang, very much for joining in. Great conversation as always. Very, very helpful in times of such uncertainty and volatility. I think investors listening to you know that they need to just keep the faith. Use these, chances as a great buying opportunity. Thanks. Have a great day. And happy Holi. I don't know if you celebrated yesterday, whether you'll celebrate today after work. I'm not sure, but, have a good one. Thank you.
Wish you and your entire team and all your viewers. Thank you so much.
Thank you. Thank you so much. Well, viewers, let me reiterate, happy Holi to everyone who's celebrating today. Just that the color on the screen is just so red, 500 points lower. By the way, we've got a query coming in from a viewer, and Dhruv, thanks for pointing this out. Dhruv is saying, why are gold and silver ETFs opening with a gap down? That continues to be a watch point, right? And I just checked most of the ETFs indeed. The Nippon Silver ETF is down about 7%, SBI Gold ETF down 3.5%, Gold Bees, Nippon Gold Bees down 3.5%. Most stocks have opened down. There's a lot of volatility, and we'll ask the experts to answer this actually, but there's just been intense volatility. Gold and silver had actually cooled off in the overnight action, in US action, because there was this hope and expectation that you will see some cessation of hostilities, Strait of Hormuz will open up. And that's why these commodities had cooled off in US market action. But in Asian trading, again, there is a risk premium building up because Asian markets aren't quite convinced about President Trump's promise that Strait of Hormuz will open up and that, and no one knows when this war is ending. So there's just so much of choppiness in the gold and silver market. And then please remember that gold and silver ETFs here trade depending on the physical demand and supply here in the India market. And that is why usually you see these, extreme volatile situations, though the regulator has moved in to curb volatility in gold and silver ETFs, and the daily limits now will no longer be straight away 20%. The initial limits will be 6%. And then they get flexed, and then, the circuit opens up, and then the move can be going up or going down all the way to 20%. But now the circuits are at about 6% to try and limit this kind of volatility. But yeah, if you're trading in and out of ETFs, then be ready for it. It's going to be a volatile ride, just the way things are playing out. Too much moving too soon, and a lot of money chasing these products as well. So keep that in mind. Okay, with that, let's welcome in our next guest, Devendra Singhal, Executive Vice President and Fund Manager at Kotak Mutual Fund, is joining in. Devendra, thank you so much for being with us. Good morning to you, and great to have you on the show. First of all, season's greetings. I wish you managed to get some rest and managed to have some joy on the holy holiday yesterday.
Thank you, Sukhbi. A very good morning to you. Yes, it was a playful Holi yesterday. At least in Bombay, we were celebrating it. I think up north, it's getting celebrated today. So wish all the viewers up north a very happy Holi.
Yeah. Devendra, before we get started with the equity conversation, actually, let me ask you, you're the expert. I mean, you guys, even at Kotak, you run gold and silver ETF. So please give me your view on the volatility. A lot of viewers obviously get very confused, and a lot of viewers have piled in. We all know the January data. We remember 24,000 crores going into gold ETFs. So just from your vantage point, you are a fund manager. You're part of an AMC. What is the advice that you would give out? Pure personal finance advice to those who are trading in these commodity ETFs, which are very volatile. Why are they volatile, and what should people keep in mind?
See, traditionally, whenever you do an asset class diversification, you need to balance your portfolio into an asset because there's low correlation with equities and debt. So to that extent, precious metals come up really nicely and fit up pretty nicely within that bucket. Now, in the recent times, the volatility has been, very high because there's been a very sharp run up into these metals over the last couple of years. Especially last 1 year, we have seen the kind of hike which these things have gone through. It is unprecedented, specifically silver. So, at the higher levels, the volatility starts getting increased because people, tend to get pretty jittery because the swings are also pretty large. So I think it's going to remain for some more time. You should not get perturbed by it. Only have the amount which you can digest the volatility. But on a longer basis, we do suggest investors to have a decent portion of their wealth into precious metals, around for conservative investor around 10%, for an aggressive investor around 15%. That kind of money should be there in precious metals, including gold and silver.
Okay, fair point. Now let's talk about equities. By the way, look at the slide on the metal index today. And you thought that hard commodity, there was this rush towards hard commodities. Let's start right there. Equities anyway were not performing. And then metals was one pocket globally. I mean, actual metals were rallying and stocks linked to metals were rallying. And you're seeing that nervousness is now hitting even the metal space. So let's start right there. What has been your view on hard commodities versus Indian equities and this whole last 2-3 month story that metals were one of the better performing sides of the market? Did you play in that trade on the long side? Do you like metals? And what would the thought be now in this volatility?
See, metals have performed pretty significantly over the last couple of quarters for sure. And we do have some metal exposure across our funds. Most of our funds do have a metal exposure. Wherever metals comes into the picture and in diversified funds for sure, we do have a decent exposure. More towards non-ferrous than towards ferrous therein. But the rise has been pretty significant across both of them. Now, the view here is that, with the production cuts being happening across, you should see firm up in metal prices happening. But if your energy prices starts moving up, I think it's going to impact quite a few of these companies also to a large extent. So I think that is where, one part of the market, one part of the component, which is basically resulting to this metal slide. But I think, should be honestly, in this kind of market, it is no relief to any particular sector. It's all being beaten down. So you just can't pinpoint a reason, why this is happening now and not happening earlier.
Okay. So, Devender, now, what are you thinking? Let's start from the top. Because I think earnings season, third quarter was pretty okay. Then we had this whole AI worry and the IT disruption. The market had to deal with that. Now we have a war and we have to deal with a war. And some of these events are actually pretty significant and big. I mean, AI disruption is not something that you can wish away. And this war is something that hopefully ends soon. We don't know. But how are some of these bigger events shaping your stock selection thought process, shaping your portfolios at this juncture?
To be, while it's easier to say and then implement it, we have been focusing more on the domestic-oriented sectors for some time now. I'm not saying that we don't have an exposure to IT. We did have exposure to IT and a meaningful exposure there. But of last couple of years, there's been more focus on the domestic-oriented sector, and specifically the ones where we find the growth rates being sustainable on a large extent. Financial services, for one, we were pretty overweight. They have a less dependence. But needless to say, we have seen that sector also getting, rogered down as we speak. Automobiles has been one. Consumer discretionary has been another. There's been a pretty good focus there. Been hospitals, on the healthcare. That was one segment we have been really bullish on. So we had been focusing on the sectors whereby have little volatility with the global parts. But it would be foolish to say that we don't have a exposure to sectors which don't have a global dependence. No, we were exposed, but I think more exposure towards the domestic sectors, and I think that is where Indian market is also gives you more opportunity to be a bit alienated from the global world to some extent there.
Okay. So be more focused on domestic facing sector. That's one piece of advice. So what would that be? Right now, if I talk about when blended across the multiple funds that you manage, would it be financial services? Would that continue to be like the go-to space? Or are you looking at consumer as well? What exactly in the domestic facing story
So
are you chasing?
financial services, automobiles, consumer discretionary, healthcare as a sector with more dependence on the global or the domestic market. And then on the power utility side also, we are pretty bullish.
Okay, all right. So that gives us a bit of a framework. Power utilities, autos, and of course financials, among others. Devendra, on power utilities, there's also, actually more than power utilities, maybe it's some of the capital goods companies as well. There's this whole data center play, and everyone's trying to figure out which part of the power chain will benefit the most as India sets up more and more data centers. What are your thoughts on this?
So unfortunately, in my portfolios, I have very little play on play on the data center. So I missed out that rally. But it's pretty confusing because a small component is getting the valuations like or a small component on the power play is getting valuations which are saying that that this is the data center play or the AI play. I think that part of the market is where we need to be a bit more worried on. I think the sector would get opened up. You will see data center plays, direct plays also coming up into the Indian market, especially in the listed space. I think while there are few components whether you can play a power backup or you can play a real estate or something like that, but I think ultimately most of these utility providers would be taken and should be valued as a utility player, rather than a fancy multiples what this power center plays or the data center plays, get valued at globally. So I think that is where the disconnect is. The infrastructure provider should get valued as an infrastructure provider, not as something which is related to the technology and is changing the world. That Amazon.
Devendra, I know you can't talk about individual stocks, but I'm just going to use L&T as an example. I mean, look at the way the stock is getting smashed. It's a large company. It's a huge stock. It's down 7% right now after a 5% fall on Monday. So it really makes you wonder whether this is going to be a lot more disruptive, this West Asia war, than what the market is used to. The market is used to ignoring geopolitical geopolitical concerns and wars and just moving on. We saw that in Operation Sindoor. We've seen that even in the Ukraine war. I mean, the impact didn't last beyond 5-10 days. So do you think this is how it will play out, or is it different this time?
So whatever we have been reading on or what we'll be hearing on, it doesn't look like they have the enough arsenal to carry on a war for a longer period. So hopefully it should also end up soon. Now there are stocks which are having a lot of business in the Middle East. So definitely that's getting hampered, and you're seeing the impact on those names currently. So we do hope that the war ends soon. The indications are that they don't have enough arsenals and it's going to be really expensive to continue it beyond a point. So keeping fingers crossed.
Yeah. So what's the investing advice now, Devendra? And also this whole debate around mid caps and large caps. How are your portfolios positioned? And do you see more comfort in large caps given the uncertainty, or do you think it'll all pass and ultimately it makes sense to have a greater exposure to mid caps now?
See, whenever we make a portfolio, it's for next 3 to 5 years therein. So if you get good names at attractive valuations, you have to ignore the near-term volatility and build the portfolio accordingly. I think this market is giving you some correction which was needed in the mid-cap and small-cap names, which would basically bring down the valuations, and they are started looking attractive therein. I think a bit more correction, they would really be in a really attractive levels to be looked at for a longer term view. Having said that, at any point in time, Surbhi, you do find stocks in the large cap, mid cap, and small cap space, and that is what our job is. So we are continuously looking out for stocks and are finding stocks which can give you good returns over the next 3-5 years, irrespective of the volatility in the near term. And we're pretty happy with the way the portfolios are being shaping up.
So what's the final advice? This turbulent Wednesday morning, Devendra, what's the... Yeah.
Keep invested, stay patient, have return moderations which are a low double digit. I think you are in a good hands to be there. And the best time to invest in equities is now if you have a 5-year plus horizon.
Okay, so low double-digit return expectations and a 5-year horizon, and then you're fine. Then you don't need to worry about disruptions or wars. Yeah. Okay, got it, Devendra. Good conversation. Thank you so much. You have a great day going ahead, and we look forward to connecting again. Thank you for speaking with us on Money Control. Thanks.
Thank you very much.
Thank you. Okay, well, what is the market doing? The market is still dealing with a cut of about 500 odd points. Nifty is struggling. Nifty has not been able to hold above 24,400. It's actually now sliding towards 24,300. So the pressure is on. It's a 2% cut on the Nifty, on the midcap index, and on the bank Nifty. All the key indices are down by about 2% as we speak. Let's do one thing. Let's quickly run through some of the brokerage reports that we've got this morning. And many of these brokerages are talking about oil and gas stocks and what to expect given this massive West Asia disruption. Check out some of the brokerage views, some foreign brokerages for you, some local names as well. And we'll be back because oil and gas is actually exactly what we are focusing on next on the show to talk about what this disruption means for stocks here in India. Back in just a minute. Check out the brokerage views in the meantime. Welcome back. So yes, the screen color is still very much red. We still have a over 500 points actually drop on the Nifty, and a lot of the oil and gas stocks continue to face pressure as well. In fact, let's do one thing. Let's pull up HPCL, BPCL, IOC as we introduce our next set of guests. A lot of the gas stocks, the city gas distribution stocks, by the way, have also been down. And as I see names like HPCL, BPCL, and IOC. Of course, the color continues to be red on most of them. Mahanagar Gas, by the way, is down 7%. And the oil refining companies, the ones on your screen, they're down about 3 to 4%. But the cut on Mahanagar Gas is severe, 7% down. IGL is also down about 2.5%. And I think even Gujarat Gas is down lesser. It's down about 1.3% at this point in time. So what lies ahead? Will the Strait of Hormuz start functioning again? The US president says that he's willing to provide insurance coverage. He's willing to provide US Navy ships to protect the transit area. But I don't think the world markets are entirely buying it right now. We've got Prabal Sen joining in, someone who's been tracking these markets for many, many years. He's from ICICI Securities. Prabal, good morning. Thanks so much for joining us here on Money Control. It's our first interaction with you on Money Control. Of course, we've been speaking on CNBC for years, but it's digital. It's all about YouTube viewers. And the viewers this morning probably really want to know what's happening with oil and what that means with the sector here. Your thoughts first on everything that we've heard over the last 2-3 days.
Yeah, I mean, thank you for having me. I'm very happy Holi to you and all of your colleagues over there at the studio.
Thank you. To you too.
Yeah, thanks. I think, this is basically 20% of global LNG liquefaction capacity going offline on a single event is not something that you mitigate for or you prepare for. That let me just put that out there. The fact is that this is a fairly unprecedented event. Pretty much in the last 30, 40 years, we have not seen this level of disruption or this level of uncertainty. Even the Russia-Ukraine conflict, which is often mentioned as a reference, the fact is that there about 5 to 6 million barrels a day of oil, and maybe about 5-10% of global LNG capacity was under some sort of impact. But even that was never really stopped or under a threat of being completely stopped. Unlike now, where the production of LNG itself has actually been stopped in a significant way, with more disruptions basically possible because of the Strait of Hormuz still remaining uh, unnavigable, if I can use that word, as of now. You mentioned about the US president saying that there will be insurance provided and there will be military escorts provided to ensure that flows continue unimpeded. But at the same time, remember what has happened in the Red Sea. I mean, while it is not as strategic a choke point as the Strait of Hormuz is, there you had the full backing of the US military, you had military vessels patrolling and everything else, and yet ships were continuously avoiding that strait because all it needs is for one drone to get through. And that is like it for that particular ship. And I think that fear is what is probably what is impacting numbers and earnings. It's very difficult today to create scenarios of how long the war would last. All of us obviously hope that it's going to basically last for not more than 10-15 days. Pronouncements from the Indian government suggest that 20 to 25 days is the cover that we have on inventories for crude and products with the companies. We also have some strategic storage. I think the estimates vary, but it could be, I think the oil minister was quoted as saying that we have around 75 days of reserve as far as those reserves are concerned. So, a month and a half is something we can navigate. More than that, frankly, it's going to be very, very difficult to sort of mitigate in a near term. So there will be some pain from a supply standpoint.
Okay, that's a pretty vibrant looking screen, I must say, that our producers have put together. You can see the stocks there. You can see the very interesting graphic that our team has also prepared, just showing that Strait and why it has become such a critical economic flashpoint in this war. And the stocks on your screen, I mean, most of them are down rather than up. Oil India and ONGC are really the only beneficiaries of what's going on. Everybody else seems to be suffering. So, Prabal, I want to start right there. In fact, before I get to some of Prabal's individual calls on this and how he's reading the situation, I think we also have Sehul Bhatt, director at CRISIL, and Sehul tracks the oil and gas space as well quite carefully. Let's see if we can introduce him on the show. Is Sehul ready? Do we have him? Okay, I think we'll get to Sehul in a bit for his opening comments as well. But the thing is, Prabal, the interesting part is that you would have imagined that with this kind of assurance coming from the US president, the US equity market bought it yesterday. The Dow from a 1200 point fall reduced it to a 400 point fall. But Asian markets and the oil markets themselves are not buying it. So then where does that leave us? I mean, then we can only hope that this ends in 2 days, 3 days, 4. We don't know. But do you agree with the market's assessment that Hormuz will remain shut for now, despite whatever the US president is saying?
No, I think more than it being completely shut, the fact is that we are talking about 21 million barrels a day of oil that actually, on an annualized basis, that actually transits this particular Gulf. And then you add around 20% of global LNG, which is about close to 80 million tons of LNG. Now it is not even being produced, but even when the operations went on, there was uncertainty about how that would be evacuated. So even if there is not a full closure, if you're talking about, let's say, maybe 30 or 40% of available capacity being utilized because of hesitation on the part of shippers, because of issues with insurance, because of maybe stray incidents here and there of attacks on ships that may or may not happen, even that, I think, is a massive uncertainty or a negative development as far as countries like India are concerned. China's 40% of crude imports go through this strait, right? India's 45% of crude, 40% of LNG imports go through this strait. So impact of even let's say part of this is not something that you can just mitigate away in a short time. I again say that if the conflict or if the situation lasts for 20-25 days, it's something that eventually markets will recover. as soon as there is some clarity on an end or some sort of resolution to the conflict. As of now, what you mentioned, we just don't know
Yeah.
how this will basically play out. And I think that is what is spooking the markets.
True.
US, if I can take 3 seconds, is still in a stronger position because at the end of the day, it has sufficient crude production, it has massive gas production. So anything that reduces the price of Brent, which it did after the pronouncement, that itself is reason enough to sort of maybe spike the markets. For us, I think that luxury is
Yeah.
not there with 80% of our crude imported
Yeah.
and 50% of our LNG being imported. I think that's the issue.
Yeah. No, absolutely, absolutely. And, any alternatives, even if they're discussed, I think they'll be costlier for sure. When talking higher freight charges, definitely higher insurance premiums. By the way, I mean, our sister channel CNBC picked up that I think sources that they were speaking with, my colleagues there were speaking with in the oil and gas ministry. It seems that right now we have supplies for about 20 to 25 odd days. And the government's maintaining that there's no need to panic and everything's under control and this will get resolved. But I don't think we're at optimal reserve levels, which some describe should be 90 days, etc. I think we're less than a month in terms of our supply security. But Prabal, just stay on. We do have Sehul now joining in. Sehul Bhatt, director at Crisil Intelligence. Sehul, good morning. I don't know if you could hear my conversation with Prabal, but your opening thoughts,
Yes.
and it's anyone's guess right now. I mean, for how much longer do we keep seeing oil in this range of 80 to, I dare say, 85, 90? Because the US president's assurance right now is not helping the market. The market is not buying it. People are scared to transit through Hormuz. What is your assessment at this point?
Absolutely. So I think there are two prominent risks that we see from India's import point of view. Both for crude oil and the gas put together, they form almost 30% of energy mix for India, and hence the entire development that we have seen for the last few days are concerning. There are two impacts. One, the immediate one, which we have already seen, is on the pricing side. The crude has already gone above $80, and obviously with some assurance coming in from US, the moderation is seen, but it has not gone to a significant lower level. And at least we see for the next few weeks, till situation continues to be like the way we have seen for the last few days, it's likely to remain at an elevated level of $80 plus. If things do not escalate further and things settle down in our base scenario in a shorter period of time, I think then we should look at a moderation, and that's where the normal demand supply dynamics for the industry should come in. Our view right now with the base scenario of not escalation of the current conflict beyond a point puts the calendar year 2026 forecast for crude in the range of $65 to $70. But obviously there is a significant upside risk to this, and the numbers could get elevated if there is a prolonged conflict that continues for a longer time. So that's one, which is on the pricing side, and that's already seen on the spot market. In addition to the barrel quote, I think like you and Prabal rightly mentioned, there are two incremental costs that comes in terms of input realization. The first is the freight cost, and the second is the insurance premium. While there is an assurance given by US recently, but I think the market may not have factored in fully, and we need to see how all of that translates into the realization terms. The second part is on the procurement, and that's where I think we need to see to what extent the conflict continues for a longer time. Because as you rightly indicated, the numbers quoted by ministry a month ago indicated, put together all supply chain components, the inventory was to the tune of 74 days, starting from ports to the underground storage. That number might be slightly lower now, but again, the official numbers are not yet out. Yesterday, the ministry confirmed that and affirmed to the industry that they are looking at this scenario very critically, and as and when required, strategic steps will be taken up. But I think we need to see how the situation arises, because the constraint on choke point of Strait of Hormuz does not go well as far as procurement decision for India is concerned, given that it forms almost 50% of import route for India, not just for crude oil, but as well as for LNG. And that's where on both of these commodity mix, I think the risk continues to be very high for pricing as well as procurement.
So, okay, let's start understanding second order effects, Prabal. Now, if prices remain where they are, and since I mean it is what it is, and if we assume, say, average $85 a barrel for some time, when does that start impacting, say, refining margins, etc.? What happens? What does oil at 85 really mean for the entire chain, oil and gas chain?
So, okay, obviously ONGC and Oil India would stand to benefit every dollar increase in crude
Yeah.
prices. And I'm assuming, of course, no windfall taxes, nothing to constrain the realizations. Then if you look at the movement
Yeah.
of
Yeah.
$20 from the $65 levels, that is a straight 22, 20, 24 to 26% earnings spike for their earnings. That is, that's the simplest calculation to do. Number two, if the spike also leads to a commensurate increase in GRMs, and of course, over a near-term period, it can lead to inventory gains as well. Then obviously on a GRM, on the refining business front, OMCs as well as Reliance will stand to benefit. That's number two. Number three, given the environment that we have, the basic assumption one can make is that this spike will not be allowed to be passed on to the retail consumers. In that situation, then there is a very big hit that can happen to marketing margins. Every dollar increase again in product prices without being passed on can cause a 50 paisa hit to the retail margins. So if you look at blended margins today, they are still at the level of around 5 to 6 rupees or so. That can actually turn into negative territory if you look at a $15 spike that we are staring at this point of time, right? So that can
When you
basically
say
go to a
blended, you're
negative.
saying refining plus marketing.
No,
Prabal,
I'm
sorry,
talking
you're
about blended
saying
retail
when you say,
margins.
okay,
Just the petrol and diesel blended retail margins I'm talking about. What you're mentioning is
okay,
integrated
okay,
margins. I'll come to that
okay,
later.
yeah,
So on a blended
okay, okay,
retail margin front, you can probably look at basically negative territory of maybe about 3 to 4 rupees in the current
okay,
environment, which is a
okay,
very big hit. So
okay,
now coming to what you are asking, which is integrated margins. Integrated margins today are at around 7 to 9 rupees a liter, combining refining and marketing
okay,
for the three OMCs. I mean,
okay,
the levels differ between them.
okay,
Those will basically get into negative territory, unfortunately. You're looking at losses similar to what happened in the aftermath of Russia-Ukraine conflict, when, of course, again, prices were basically freezed in April 22 and, kept there. So FY23 therefore obviously saw massive losses on the part of the OMCs. We could see something similar if, of course, the conflict lasts that long and nothing really changes and prices remain where they are. So a lot of assumptions to be made here, but as you said, ceteris paribus, prices are not allowed to be passed on. Crude remains above 80, and the supply disruptions continue to be there. Then you're looking at extremely sharp negative impact on the OMCs, and as a further derivative for the gas companies as well, because LNG prices would rise, even the
I'll
ones
come to
linked to
gas.
Brent or
Yeah.
sorry.
Yeah, Prabal, I'm just, because this is really technical, I'm coming to gas in just a bit, but let me just recap this for our viewers. So what Prabal's analysis is showing that obviously Oil India and ONGC benefit straight away, and the benefit could be as much as 20 to 25% on their earnings. But what Prabal is saying is that both the marketing margins, the retail level fuel retailing margins, they can turn negative, and even the integrated margins, the refining plus marketing margins, they can turn negative if oil remains in the zone of 82 to 85. Over what period of time, Prabal? I mean, how long does crude have to stay here for this negative hit to come through?
No, I think I don't know how to explain that in terms of time. All I'm saying is that crude, your margins can be calculated on a daily basis or a weekly basis, even if you really want to. So the longer
Okay.
$82 to $85 price level stays, for that period of time, you're making negative margins. Now, whether that is going to reflect in
Got it.
annual numbers or not, comes back to the question of how long these prices and this environment stays. So
Got
these are
it.
margins on a daily basis that you're talking about.
Got it. Fair enough. That really gives us a very clear, stocks level impact and how this will play out if you're investing in these oil and gas stocks. Gas, I'm coming to now. Sehul, just your thoughts if you want to add something on the refining side and how you're saying global GRMs get impacted with this. I mean, what should we expect? Where were global GRMs before this conflict started? And what will happen? What will happen to cracks as well? I mean, all the product distillates down the curve. What happens if oil remains at current levels?
Yeah, so I think there are three, four layers of impact that we would see. If you look at the Q3 FY26 GRMs of listed players, it was around $12. And I think the elevated level of crude oil obviously puts pressure in terms of the refining and the R&M players put together. We see first layer impact directly on the overall import bill of country. We saw FY25 somewhere around $161 billion of crude and related petroleum imports were seen. And obviously there is an upside risk to that because of the elevated prices we continue to see for a longer time. Second is the area and the segments which consume oil directly as a raw material. So entire pack of chemical, paints, aviation, synthetic textile, up to an extent, some of the components within auto, say tires and all, they continue to be impacted because of the elevated level of crude. Because of the entire scenario and the concern that we see on the Middle East side, we also see not just the impact on commodity, but also the trade dynamics getting impacted. So exports of commodities such as say agri-produce or the textiles, gems and jewelry from an export point of view from India to Middle East, that also may get impacted, especially in the Q1 of FY27. So net, that's the direct indirect impact. On the gas side, as you indicated in the previous question, we are already seeing some pressure in terms of availability for industrial and commercial consumers. Because from an overall consumption point of view, we have roughly half of dependency on imports. And within that, if I look at sectors which consume directly within the CGD network, the CNI consumers which completely rely on the import of LNG, I think that's where the pinch will be relatively higher compared to the rest of these sectors such as fertilizer or power.
Okay. That's as far as refining is concerned. On gas now, probably coming to that point, and we've seen some of that play out. I think gas futures was surging some 40-50%. I mean, European futures, that is. And like you explained, that we are getting 40 to 45% of our gas from this region. We're the second biggest buyers of Qatari gas after China.
Yeah.
So what happens? I mean, look at Petronet LNG. Let's fire up the Petronet stock, actually. It was down 6% last I saw it. So what happens to gas players and the city gas guys? I mean, Mahanagar is down 7% now because, again, I think there are reports indicating that they may have to look at lower supplies. I don't know, I mean, how this works in terms of if they don't get the feedstock, the raw material, then what happens?
So I think there are reports, and now obviously let me clarify, we've not got any official communication from the companies as of now. So this is all based on news reports, but reports from Reuters and all indicated, that 30% of supplies have been basically curtailed by Petronet to the off-takers. So which obviously then spills over to the ultimate gas consumers. So you are seeing supply cuts, as the other gentleman was just mentioning, that in the industrial sector, there are already supply curtailments that are happening. Because even though in LNG, there are alternates available to a certain extent. I mean, yes, 20% of capacity going offline is not something that can be mitigated completely. But, with supplies coming in from the US, with Russia having a lot of idle capacity, which is what I was mentioning earlier, that, there could be some practical realities where Russia could get some of its energy exports back into the market and India would stand to benefit. But in the near term, obviously, if your 10, 15, 20% of supplies are actually curtailed, then it is obviously going to create supply shortages or at least supply cuts to a certain extent. And homes and CNG will remain priority, but industrial users, even commercial users, all of them can actually see some curtailments and some cutbacks till the time, the supply is resumed or stabilized.
Which is why, Prabal, I was a little surprised to see the fall on Mahanagar gas so much, because if anyone gets priority in gas allocation, it actually should be MGL. They're the guys supplying to the homes. The gas supply will be probably, if at all, it has to be curtailed. It'll be industrial users. So why is Mahanagar down so much? Not understanding.
No, I think what is basically playing out is that whoever has more of, let's say, LNG and even US Henry Hub based supplies, maybe the apprehension is that all supplies could basically see a price squeeze. And Mahanagar anyways has seen its margins actually decline a bit in the last few quarters. So maybe that apprehension, but you're right. Okay. I think something like a Gujarat Gas probably can see a little bit more of a hit since it has got more of industrial, users in its portfolio. So, but, in this environment, I mean, difficult to understand why a stock is moving as much as it is.
I mean, we're not in entirely rational markets in any case. So completely take your point. Gentlemen, coming down to final thoughts then, in terms of what the next couple of days and weeks could look like. Sehul, so what is your assessment? I mean, obviously the government is saying nothing to worry about right now. We seem to have 20-25 days of reserves. What are the alternatives? And if we are to look at supplies, say from Russia again, which comes with its own issues, geopolitical issues, what else can India be looking at in terms of buffering up stocks? And then what is the increase in freight costs that these oil refineries will have to be prepared for?
Right. So I think between oil and gas, I think the severity on gas side is relatively higher because the inventory stock relatively is lower in that category. And what alternatives are available? I think it's a very tricky situation currently because from oil point of view, while we were relying significantly on Russia so far, that's what YTD data shows. But with the development that we have seen over the last quarter or so, where our procurement from Russia has been relatively reducing, what are the alternatives available outside of the OPEC market? Will it be again Russia or will it be slightly higher procurement from US and Venezuela? That needs to be seen. On the gas side, again, barring Qatar, I think the next alternative could be on the US or the other markets. But as you rightly indicated, on top of the commodity spot market pricing, the risk premium and the freight cost have significantly gone up because of the rerouting and the war premium that comes in. So I think from a realization point of view, it's going to be expensive if we are able to manage procurement of adequate quantity in case of replacement of sources. So I think we need to watch out for at least next 1 week or so in terms of how situation evolves.
Got that. Okay. Prabal, final word with you then. And actually, I noticed that you did have quite a few picks in the oil and gas space, I think including some of the OMCs as well. So are you going to be retaining those calls, or has the time come to maybe relook at them? Stocks,
I think
your buys and your clear
I'll
avoids.
take a vacation. Is the only. I think I'm planning on taking a vacation.
We all can do with a vacation.
Right now.
I also want to do that. Prabal. If it's any comfort, I also did not want to come to work. I think we should all take a break for the next 5-10 days. But it is what it is.
Unfortunately, I think so our buy calls were basically based on a very simple thing, and I think the report we put out also stated that demand supply fundamentals at the end of the day remain favorable from a pricing perspective. If you look at 2-3 years down the line, the core assumption right now, or at least earlier, that we were making was that every market fundamental pointed to a fairly benign pricing environment, both for oil and gas, which is always good news from a downstream perspective or from a gas sector perspective for India. This conflict, of course, is something that has completely upended all of those assumptions. So as of now, frankly, very difficult to give any fundamental buy or sell call, to be very honest. And that's why I mentioned that tactically speaking, ONGC and oil clearly stand out. And I think those will continue to do well until, if at all, any sort of windfall tax or anything like that is put out. Then even that sort of, that gain also becomes limited. As far as downstream, I think, again, what the gentleman was mentioning, it is more about the duration of this conflict. I think one will have to really keep an eye on if this conflict lasts meaningfully beyond 1 month, then of course one will have to take hard calls from a sector and probably from a broader market perspective. As the government is mentioning, as the petroleum minister has mentioned, I think 20, 25, 30 days is something that can be managed with some reallocations, minor cuts here and there. Beyond that, I would presume that Indian government is making urgent efforts to renegotiate or figure out how to arrange for additional supplies, even from Russia if need be. But that's above my pay grade, so I won't want to comment on what's going on as far as arranging for those things, right? So if and when that happens, I think that's something that should be mitigated. As of now, frankly, we're not really changing any records because I think it's too early to try and change records based on every 2-3 day developments. We just wait and watch.
Fair point. Gentlemen, thank you so much for joining us on this very, very comprehensive take on what the oil and gas markets are grappling with and what India is grappling with specifically as the conflict in West Asia rages on. We do live in a very, very complex world and we're dealing with markets which are very confusing and complicated. But I think being nimble, staying focused and watching developments very carefully is the key, like Prabal said, and thank you for putting that on the table, that you never know if a windfall tax is announced because oil prices are going up. I mean, it could take away some of the gains of even the upstream companies. So stay nimble, stay focused, follow the news, and just be ready to act once you understood everything. Thank you, gentlemen. Very, very helpful conversation. And of course, it's going to be playing out on our YouTube. We will be taking this conversation, putting it out there separately so people can go back and refer to this to understand what the next couple of days will bring. Have a great day, gentlemen. Thanks for joining in. And with that, we are completely out of time on this edition of Opening Bell. But as I wind up, let's do a quick check on the market. First of all, see what's going on. The market is still struggling. The Nifty is still down by about 500 points. The midcap index is down even more than the Nifty. It's down by about 2.5 points, 2.3% right now. There you see in the Bank Nifty is also down. So there's no sign of buyers coming in. It's not that kind of a market. It's not a buy on dips immediately till one understands what's really going on out there. So as we watch the stock market screen, it takes us back to the geopolitical screen. And that's what I want to end the show with. What the US president is saying and what really is going on in the Middle East right now. As those fresh strikes were launched on Iran, the US is claiming that Iran's naval and air capabilities have been totally neutralized, a development that could rattle global markets and energy supply chains. Now, President Trump held a bilateral meeting yesterday at the White House with Friedrich Merz, the German chancellor. And he also then spoke about how the US is completely dominating the skies and the seas around Iran and what lies ahead. He's promising safe passage for ships through the Strait of Hormuz and saying that more is on its way. Take a look. Thank you for watching, and we'll keep getting you more news and updates on Money Control.
We'll obviously be talking a little bit about Iran today, and he's been helping us out. We've been very nice, actually. And that is coming along, as you see, very well. They have no Navy. It's been knocked out. They have no Air Force. It's been knocked out. They have no air detection. That's been knocked out. Their radar has been knocked out. And just about everything's been knocked out. So we'll see how we do. But we're doing very well. We have a great military, and they're doing a fantastic job. So we'll be talking about that.
We are on the same page in terms of getting this terrible regime in Tehran away, and we will talk about the day after, what will happen then if they are out.
You see, we were having negotiations with these lunatics, and it was my opinion that they were going to attack first. They were going to attack. If we didn't do it, they were going to attack first. I felt strongly about that. And we have great negotiators, great people that do this very successfully and have done it all their lives very successful. And based on the way the negotiation was going, I think they were going to attack first. And I didn't want that to happen. So if anything, I might have forced Israel's hand. But Israel was ready and we were ready, and we've had a very, very powerful impact because virtually everything they have has been knocked out now. Their missile count is going way down. Amazingly, they're hitting countries that were, let's call them neutral, right? They lived together for a long time. I think they were surprised. I was surprised. And now those countries are all fighting against them and fighting strongly against them. We'll obviously be talking a little bit about Iran today, and he's been helping us out. We've been very nice, actually. And that is coming along, as you see, very well. They have no Navy. It's been knocked out. They have no Air Force. It's been knocked out. They have no air detection. That's been knocked out. Their radar has been knocked out. And just about everything's been knocked out. So we'll see how we do. But we're doing very well. We have a great military, and they're doing a fantastic job. So we'll be talking about that.
We are on the same page in terms of getting this terrible regime in Tehran away, and we will talk about the day after, what will happen then if they are out.
You see, we were having negotiations with these lunatics, and it was my opinion that they were going to attack first. They were going to attack. If we didn't do it, they were going to attack first. I felt strongly about that. And we have great negotiators, great people that do this very successfully and have done it all their lives very successful. And based on the way the negotiation was going, I think they were going to attack first. And I didn't want that to happen. So if anything, I might have forced Israel's hand. But Israel was ready and we were ready, and we've had a very, very powerful impact because virtually everything they have has been knocked out now. Their missile count is going way down. Amazingly, they're hitting countries that were, let's call them neutral, right? They lived together for a long time. I think they were surprised. I was surprised. And now those countries are all fighting against them and fighting strongly against them.